What a cinematic week, don't you think?
AMC hit $72 on Wednesday and closed Friday at just below $48. The short seller lost over $4.5 billion in just about 10 days.
It's insane. Now 80% of AMC shares are held by retailers. And are you thinking what I'm thinking?
I'm thinking that institution probably sold most of their holdings and just waiting for the right time to squeeze the other way.
You smell that? What is that?
What?
What's that smell?
The cologne?
No,
Opportunity.
no, money.
Okay.
I smell money.
Okay.
It got saved by the non-farm payroll and unemployment. My guess is that the institutions are still on the sideline having a stare-down contest with the retailers.
Yep, this may be a bittersweet news for the market temporarily, but I don't think it's a good idea to prolong this economic conditions. All goods and services costs are driven up due to demand. Stimulus benefits will soon or have already ended for some of the states. Now that eviction ban will expire in less than a month, millions of Americans could find eviction notice on their front door.
Like we mentioned before, QE is like meds for the economy. The longer you take the meds, the stronger the withdrawal will be.
This Thursday, Lululemon announced earnings. Let's take a look at that as well.
Yep, and that's not waste any time and get started. If you are new to our channel, we release new videos every week about the stock market. Hit that subscribe button if you don't want to miss out.
All major indexes pulled back on Thursday after the announced better than expected ADP and national employment data.
Not surprised. The market is worried about the Fed tightening monetary policy due to good economic data. But Friday's non-farm payroll increased 559,000 in May and missed the estimate of 671,000. Market reacted positively to the job estimate miss and expected the Fed to keep loose monetary policy.
So both the Nasdaq and the S&P 500 got rejected from the upper resistance and reversed on Friday and closed above it.
S&P 500 is less than 0.5% away from reaching the all-time high, and we might see new pricing level into next week with this Friday's close.
I agree. The broken resistance became an area of support. For the S&P 500, we're looking at 4,200 to 4,215. And for Nasdaq, it's around 13,360 to 13,715. Let's see if we can hold on to this level into next couple trading sections.
Yeah, I think the next 2 to 3 days are very important. And this level is probably not a good spot to chase, right? Maybe we should start slowly booking our profits on the way up.
Well, I gotta see where you're coming from. If you look at it, there's a huge negative divergence developing on S&P 500.
The Nasdaq daily chart is not looking the prettiest either. The price bounced off from the upward trend line and is now testing the M top, where the Nasdaq dropped 5% after losing this critical level. It looks like Nasdaq is forming a head and shoulders pattern. This is something you might want to keep your eyes on.
Russell 2000 didn't shine as much as last week and is still playing inside the box. We will think outside the box once we get out. For now, speculating only.
Definitely be on the lookout for the levels we mentioned above. And besides that, I want to mention that the Fed announced plans to sell a portfolio of corporate credits and company bonds from 2020. This portfolio was created to provide support to companies due to COVID.
That sounds like the Fed is withdrawing money from the market. I'm sure everyone is wondering about the impact.
All right, let's break it down then. According to the press release, the Fed will sell the portfolio at a gradual and orderly pace.
Sounds good, so we don't have to worry about big volatility in the market. What is it in the portfolio exactly?
The portfolio mainly has bond ETFs and corporate bonds available in the secondary market, meaning something that both you and I have access to purchase as well. The Fed didn't buy it from the primary market. So secondary market implies that the Fed selling is a normal activity. It's nothing out of the ordinary.
Yep, the Fed plans on selling these ETF and bonds before the end of 2021. Basically, the Fed will be returning this cash back to the treasuries.
If you're wondering what company bonds are the Fed's holding, these companies probably include Visa and Walmart, these big, safe, and stable companies. And the holdings are company bonds, not stocks.
Yep, so no, your Visa and Walmart stock won't tank. So please don't dump your good company next Monday because of this news.
Exactly. Anyway, the Fed is holding 5.2 billion worth of corporate bonds and 8.5 billion worth of bond ETFs. So we're looking at 13.8 billion in total.
So 13.8 billions, to be honest, is not a big deal, especially when the Fed promised to sell gradually. As in the market has 6 months to slowly digest this, Fed doesn't think that this is a signal for monetary policy change and won't directly impact the stock market.
Yep, so we don't have to overthink about this announcement. The Fed is taking back $13.8 billion. It's really a joke compared to the monthly bond purchases of 120 billion.
Exactly. Now, if the Fed say they are reducing the monthly bond purchases, I might start to worry then.
True. And also, a lot of institutions will happily huddle these good companies' corporate bonds and ETFs from the Fed. So, really don't worry about this.
All right, so we now get that out of the way. Tesla has been limpy lately, and Thursday we got some more bad news.
Rumor is that May orders dropped to about 9,800 from more than 18,000 in April.
And they recall more than 9,000 models over adhesive issues. And Model Y is now $9,000 pricier due to manufacturing cost increased.
Let's be patient about Tesla and wait for the next earnings announcement. But on the other hand, NIO reported 6,711 vehicles delivered, about 95.3% year over year, but was less than April due to global chip shortage.
And one of their competitor, XPEV, delivered 5,686 cars in May, with a crazy 483% year over year and a 10% increase from April.
Good for XPEV, and Li delivered 4,323 vehicles, which is a 101.3% year over year increase in May deliveries.
Seems like despite the chip shortage, the Chinese EV triplets are doing well. Speaking of Chinese, Biden just banned 11 more Chinese companies from Americans to invest.
So Trump banned 48, and now Biden brought that number to 59. Looks like the US is really cracking down on China for national security. These are companies that have links to the Chinese government. So check your holdings, guys, and really pay attention to individual company news. And we'll update you guys if the list is released.
Before we talk about Blackberry, let's quickly go over some slick move by AMC.
What did I tell you last week? They should take advantage of the squeeze and load up. And you said, why would they risk it? Well, they did on Wednesday to Madrid Capital and on Thursday. They did it twice, man.
They flipped 8.5 million shares of AMC on Tuesday for $27 per share and immediately unloaded their boat for $41 million in profit on the same day. You know what this tells me, right? Madrid Capital doesn't want to diamond down with us.
Yeah, institutions, they definitely don't want to do it. And after that, AMC said, you know what? We don't want to sell our shares at a discount to an institution. We want the whole shebang. So they announced an at the market equity program early Thursday. And like I said last week, they may sell shares from time to time.
Yeah, from time to time, my ass. They sold their time to time real quick, all before noon.
And they secure another 580 million for offering free large popcorn to retail investors.
All jokes aside, this might not be the best company to invest in right now due to the volatility and risk of the stock.
Absolutely. I really don't like what the company did on Wednesday and Thursday, even though to them it's like free money. So, why not? But they can still last until at least sometime in 2022, even without Wednesday and Thursday. So I think it's pretty unethical at this point, since a lot of people probably have a lot riding on this. Well, we hope you didn't mortgage your house for AMC.
A lot of AMC's attention got shifted to Blackberry this week. The trading volume for the stock is over 500 millions on Thursday alone, and the stock closed the week with almost 22% gain. So I heard a lot of argument out there. Is this a meme stock or a fundamental growth stock play?
Undeniably, Wall Street Bets plays an important role in this week's unusual volume, and the rally was most likely fueled by them. So I say yes. This is a meme stock. However, quite interesting looking into the fundamentals of the company. This may be a nice growth stock to invest in for the long term while the stock price is still cheap.
Well, we could see another short squeeze. Blackberry stocks was trading at 8.5 per share on May 25th. So if the shares close above $20, short seller who borrowed the stock to short the company will have to pay back more than twice or three times the amount, as they will need to cover their losses. Blackberry could potentially pull a run like AMC or GME in the upcoming trading sections.
Yeah, but don't count on it though. But that definitely is a possible scenario. I hope that I'm not the only one who still thinks that BlackBerry is still a phone company. I did not know they completely transformed into a different business. They are now one of the leading cybersecurity firms.
You're a little late. They have been contracting with the US government and recently selected by the government of Canada for secure productivity and communications. I think they will hit some number this year, especially after the mess from the Russian attack.
I'm a little amazed. BlackBerry's QNX is embedded in more than 175 million vehicles, working with 23 of the world's top 25 EV manufacturers. Where have I been all these years?
It's okay. I mean, you're probably not the only one. Do you know that Amazon just teamed up with BlackBerry for their AWS? And do you know that Andy Jassy, the Xbox of AWS, also the next Amazon CEO, is very in favor of BlackBerry?
That's very good news. So, pretty much, BlackBerry is now a company profiting on recurring revenue from their software product sales and services.
Yep, and they are looking to sell the majority of its billions dollar worth of patents to refocus on the new company business model.
The stock price dropped another 12% on Friday and closed slightly above critical support level at $13. This might not be a bad entry if you feel confident about this meme/growth stock.
Looking at Lululemon, it hit $387 early January. It's been a bumpy ride down.
True, it closed at 329.5 for the week. Fortunately, we got some good news on Thursday from earnings.
Yep, the company gave strong guidance for Q2s and for the whole years as well. It says the momentum is speeding up across the geographies.
The EPS is 1.16 adjusted versus 0.91 estimated, and revenue is 1.23 billion versus 1.13 estimated.
The revenue grew 89% year over year, and net income grew 507% year over year.
That's quite an accomplishment, and the Q2 EPS guidance is raised to $1.1 to $1.15 with sales of 1.3 to 1.33 billion. And analysts are expecting EPS of 1.01 with sales of 1.2 billion.
For full year, the company is expecting $6.73 to $6.86 per shares with sales of 5.83 to 5.91 billions, which is higher than the last guidance of 5.55 to 5.65 billions in revenue. Analysts estimated $6.48 per share with sales of 5.68 billion.
When a company raises guidance, it's always worth another look because that usually means the company is very confident about the upcoming period.
Lululemon also bought 300K shares back in Q1 with the average price of 311 per share. So if you want to start a positions around 310 would not be a bad area since the company thinks that 311 is a fair value. Remember, it's not what really the company worth, it's a fair value to get the stock.
Agreed. And looking at Lulu's balance sheet, it has 2.3 billion worth of current assets and only 965 million worth of current liabilities. The current ratio is about 2.4, so it's very healthy, and we don't have to worry about the company going bankrupt.
Exactly. I think the athletic market in the US is still largely dominated by Nike, and Adidas are not far behind. Not to mention Under Armour. So Lulu's got a lot of competitions. So I would like to see continuous growth increase in international market while maintaining the growth in the US.
So Lulu's net revenue grew 82% in North America and 125% internationally year over year. I want to also add that besides the apparel competitors you mentioned, Lulu also has Mirror, which is their home workout technology. This product mainly competes with Peloton, Apple Fitness Plus, and Tonal. By looking at their Omni guest experience, which is the digital revenue including Mirror subscription, they achieved 55% year over year. Now, Lulu bought Mirror at Q2 2020, so let's keep an eye on the growth for this category. Personally, I really like that they bought Mirror. Besides the $14.95 for Mirror itself, if users want to access the live and on-demand workouts, there's also a subscription fee of $39 a month. What do you think about the acquisition of Mirror?
Oh, wait a minute. I was just thinking, how did they generate so much revenue in the first place? If I remember correctly, not a lot of people are going to the gym or exercising outdoor during the pandemic.
Well, you're right. But looking at the revenue by gender, women's products account for 69%, whereas men's only got 22%. And I know girls who wear leggings casually basically all the time. Not sure about you, but yeah, I'm not surprised actually because as I said, like girls they wear the leggings everywhere.
Well, I guess their marketing team did a fabulous job. But for me, $100 for a pair of jogger, I'm pretty sure I can get a similar one at Nike for half of the price. But to answer your question, the Lululemon mirror is probably something I will never consider or even want to pay the fee of $39 a month that could just cover my gym membership.
Well, but that's you. People buy because it's Lululemon. Anyway, besides that, looking at the company's operated stores, we can see that outside of North America, Lulu has 38% of the stores in China. So we can see that their international focus is pretty much in Asia. And the market in China is massive. So if they open more stores over there, I think they can maintain the current international growth or even beat it.
Got it. So what support levels are we looking at? Where can I get in?
Okay, first, remember this is a NASDAQ 100 company. So any NASDAQ breakdown will drag this with it, considering that it also has a decently high PE, around 50 to 60. Anyway, I see first support from 280 to 300.
Also, 266 is a critical level. If it breaks below that, don't buy it. Lulu will go straight for 220 to 240.
Agreed. So same drill. Get as close to support as possible and always remember to set stops.
Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.